So as you're going to be investing in a lot of different areas, it's very important to understand what sort of values you should be looking at for properties that should meet within those areas. As an example, you're not going to be looking for a standard buy-to-let house in an area where the average value of a property is in the region of £500,000. You'll tend to find that that's a little bit too expensive. And likewise, you're not going to be looking for properties that you can buy, renovate and sell in an area where the houses are worth, say, £30,000, because the amount of work you have to do, generally you don't tend to make enough markup to make that make sense. So for me, it's important that you understand a little bit on the sort of values or property values you should be looking at based on the investment strategy you're looking for. So as a bit of an example, the best sort of price ranges that we find for a basic buy-to-let. So this is a buy-to-let that will give you the maximum possible returns for the minimum possible money. Okay, you're normally going to be picking these houses up for somewhere in the region of between, say, 40,000. Anything less you tend to find on the value afterwards, you're going to struggle to refinance. So please understand, mortgage lenders don't like lending on houses worth less than 50,000. So you want a house that, after all refurbishments and works, is going to equate to in excess of 50,000, which means normally you're going to be buying these houses for probably no less than really about 35, 40,000. So your typical price range when it comes to buy-to-lets is between the 30, 40,000 mark and anywhere up to maybe about 100, 105,000. And then after the refurbishments, the new value will go anywhere from sort of 50 all the way up to maybe about 120, 130. Anything beyond the sort of 120, 130, you tend to find that they become a little bit less attractive as buy-to-lets because the value of the property has gone up and the rental doesn't seem to match the increase in value. Okay, so the buy-to-lets anywhere between sort of 40,000 roughly, and maybe up to about 100, even up to 110. So this is kind of your sweet spot for buy-to-lets. Now, when it comes to flipping properties, so houses that you tend to buy, refurbish and sell, you're going to be looking a little bit higher up in the market, a little bit higher values, which means instead of looking in a 2-star area, you're probably going to be looking in either a 3 or a 4-star area. More likely going to be a 3-star area than a 4, but 4-star areas are great as well. You just tend to find you need a lot more capital, a lot more money to buy that house in the first place. So your nice little sweet spots for when it comes to flipping houses, you're looking at purchase of anywhere above 80,000. Typically much less than that, you're not really going to be able to increase enough value. So typically between 80,000 and anywhere up to even sort of $500,000, you'll find some really nice flipping opportunities. Now, what I tend to find is when you start to get in the higher value, so, you know, over $500,000, even potentially over 300, 400,000, the values start to become in too much demand, and you've got a lot more homeowners or aspiring homeowners that are willing to do the refurbishments themselves and therefore make the houses a little bit more challenging to find as really good little deals to be able to flip on. Okay, so your sweet spot really is going to be somewhere between 80 and maybe 250, 300. That's your real sweet spot we'd be looking at for flipping, but of course you can go a little bit higher up in the market as well, which would be absolutely fantastic if you can find those opportunities. Now, finally, if you take a look in terms of HMOs, which is the shared housing model, where you rent the house out by the room, realistically, these areas are going to be in more built up, more congested areas, close to main train stations, close to main hospital, close to main town centres, areas that typically have a higher demand. Because they tend to have a higher demand, you tend to find the values of these properties tend to be a little bit more. So for a good HMO, your typical sweet spot's probably going to be somewhere around 90, 100,000, all the way through to maybe about 150, 200,000. We tend to find below the sort of 90,000 mark, a lot of the houses don't tend to be in the correct areas, and above the sort of 150, 200,000 mark, the price of the property becomes too expensive to justify the rental income you get from that house. Now, of course, if you're doing much larger HMOs, so 8, 10, 12, 14 beds, of course the values then go up. But I'm talking primarily about your normal little HMOs, your 4, 5, 6 bed houses, or sorry, 4, 5, 6 bed HMOs that you would be converting into those 6 bed, 5 bed, 4 bed HMOs. Those price ranges tend to be somewhere between the 90 and the 150 to 200,000 mark. Okay, that sort of tends to be your sweet spot. Now, if you're looking at sourcing, so deal sourcing, where you buy or you agree a sale, you find a buyer, you connect the two and you make the money in the middle, really you can find deals that will range anywhere from the sort of 30, 40,000 all the way through up to the extremes. Okay, and it's just connecting people. So there's no real limitations in what you find there. You just have to have the right client base and know what they want to achieve out of the property so that you can find what meets their requirements. Okay, so this is more the deal sourcing model. Now, of course, we always have the serviced accommodation model, which we discussed in the last section, and also the rent-to-rent model, which we discussed in the last section. But as these are not really models we'd advise, it's also models we tend not to teach too much on. And personally, I would advise to steer clear, but of course, you are welcome to do as you wish. Some of you may already be doing the rent-to-rent and serviced accommodation and understand exactly why I say this. But yeah, so that will give you your rough price guides in terms of what pricings you want to be looking at in what areas based on what strategies.